Welcome to the deep dive. Today, we are getting into the heart of Unit 3, Business Finance.
Yes, and specifically, we're zeroing in on Part 3, financial documents.
That's right, Chapter 32, which is all about, well, the use of those financial documents.
Exactly. It's not just making them, it's what you do with them.
So our mission really is to unpack how businesses, and actually quite a lot of other people too, kind of leverage these numbers and statements.
And for this deep dive, we really want to focus on two main things, two goals.
Okay.
First, understanding how these documents get used to assess, business performance.
Right, how well are they doing?
And second, critically, how they're used to inform decision-making, big decisions.
It's like checking the vital signs on a business.
Yeah.
And then using that info to decide, okay, what's next for its health?
Good analogy. And just a reminder for everyone following along, or if you just want to dive deeper later,
Yeah.
you can find more resources over at www.igcc-business.weebly.com.
Great. Okay, so let's get into it. Why do businesses even bother? Why create these sometimes pretty complex documents? That's the fundamental point.
Well, it boils down to something pretty simple, actually. They provide useful information.
Information. Right, that's the key.
Information is like currency in the business world, and these documents are just packed with it.
Okay, but crucially, it's not just information for the people running the show, is it?
Not at all. You've got all these different stakeholders, different groups with an interest, and they're all looking at these documents for, well, completely different reasons.
So a bank thinking about a loan cares about different metrics than maybe an employee wondering about next year's pay rise.
Precisely. Different needs, different focus.
Okay, that raises a good question then. Who are these different groups and what specific insights are they trying to pull out? Because it sounds like quite a diverse crowd.
It really is. Let's run through some of the key players the sources mention. First up, the obvious one, the business's own managers.
And their use seems pretty straightforward, right? They're basically checking their own homework, seeing how things are going.
Primarily, yes. Managers use the docs to see if the business is performing as planned, hitting targets, making the profit they aimed for. They might also look at, say, publicly available accounts of competitors.
Benchmarking.
Exactly, to benchmark their own performance. So the insight here is really that these documents give managers that quantitative feedback loop. Are our strategies working? Where do we maybe need to tweak things?
Got it. Okay, what about employees? Why would someone working for the company need to look at the financial statements? Seems a bit removed, maybe.
Well, it's actually quite interesting. Employees often look at these to understand the company's overall health. Is it doing well? Is it struggling?
Okay, so it affects them directly.
It reflects partly on their own contribution, potentially, but it's also vital info for things like pay negotiations. Can the company actually afford a raise?
And job security, I guess. That must be huge.
Absolutely key. A company that's struggling financially, well, that might mean layoffs down the line. A profitable one usually feels a bit more secure. So for employees, these docs translate business performance into, well, personal impact.
Right, okay. And then you've got people outside the business looking to get involved, like potential investors, shareholders.
Oh, absolutely critical for them. If you're thinking of buying shares in a company, these financial documents are pretty much your primary source of information to decide if it's a sound investment.
So you're looking at profitability, assets, debts, that sort of thing.
All of that. The raw data you need to assess the risk and the potential return. Plus, it helps you, verify the business is legitimate. Are they really doing as well as they claim?
So investors need that hard proof before they part with their cash.
Exactly. Financial viability proven by the numbers.
And what about those already involved through debt, like lenders, banks maybe?
Banks and other lenders are intensely focused on risk, always.
Makes sense.
When deciding whether to approve a loan, they will pore over these financial documents, especially the statement of financial position, the balance sheet.
Looking for what specifically?
Creditworthiness, solvency. Can the business generate enough cash to make the interest payments? Can it realistically repay the actual loan amount later on? It's all about assessing financial strength and stability.
To manage their risk, essentially.
Precisely. Can this business be trusted to pay us back?
Okay. Suppliers are on the list too. Now, why would a supplier care about their customers' finances?
Well, think about it. Many suppliers offer goods or services on credit, right? Buy now, pay later.
Okay, yeah. Trade credit.
Before extending that credit, the supplier wants some confidence they'll actually get paid. So looking at the customer's financial documents helps them assess that likelihood.
Are they profitable? Do they have loads of debt already?
Exactly those kinds of questions.
Yes.
Suppliers use these docs to manage their own credit risk when they offer payment terms.
It's like a whole chain reaction of risk assessment.
Yeah.
Even the government uses this data.
Yep. Governments collect aggregated financial data from lots of businesses.
Why? What for?
To understand the overall state of the economy, it helps inform their economic policies, track growth, unemployment, investment levels, you name it.
So individual business performance feeds into the bigger national picture.
That's the idea. The government uses it to plan and react.
Okay, now this one's interesting. Competitors. Why would you want your rivals seeing your numbers? Doesn't that give them an advantage?
Well, for many types of companies, like limited companies, their main financial statements are public documents. You have to publish them.
Ah, right. So competitors absolutely look at them.
Oh, definitely. They use this information to benchmark themselves. How do our profit margins compare to theirs? Are we investing as much in new kit?
And it can flag weaknesses too.
Yes, the sources mention that. It might highlight a competitor that's struggling, perhaps making them a target for a takeover. So for a competitor, public financial data helps gauge relative strength and maybe spot opportunities or threats.
Okay. The media's listed too. Financial news.
Yeah, financial journalists rely heavily on company accounts, especially the public ones. It's how they report on individual businesses, industry trends, the economy as a whole. They translate the numbers into stories.
Providing transparency, I suppose.
And narrative, yeah.
And a group everyone deals with. Tax authorities, HMRC in the UK, IRS in the US.
Right. Tax authorities obviously need to verify the income, the sales figures for things like VAT, and other financial data that businesses report.
To make sure they're paying the right amount of tax.
Exactly. Financial documents are the primary evidence for tax compliance. It's fundamental for government revenue.
Makes sense.
Yeah,
What about auditors? Their job seems, well, directly connected to these documents.
absolutely. Auditors are independent professionals. They're hired to examine a company's financial statements.
To check them.
To verify, they present a, quote, true and fair view of the business's financial position and performance according to the accounting rules.
So they add credibility.
That's their main role. They provide that independent stamp of approval, which makes the documents reliable for all those other users we've talked about. They provide the trust factor.
Okay. And finally, for limited companies, the registrar of companies. What's their role?
The registrar, like Companies House in the UK, is the official body that receives and stores the annual accounts of limited companies
And makes them public.
and makes them available for public inspection. That's the mechanism that lets investors, competitors, the media, anyone really, access that information. It ensures transparency and accountability for limited companies.
Wow, okay. That is a long list. So many different angles, so many different reasons to look at the same set of numbers. It really shows they aren't just internal records.
Not at all.
The sources also mentioned, though, that maybe small businesses, like a sole trader, might not produce this full formal set of accounts.
That's a really key point. For a very small business, maybe a sole trader or a simple partnership, unless they're applying for a big loan or unless they're legally required, like if they become a limited company, they might just keep simpler records, enough for themselves, enough for the tax man.
So the full formal statements are often driven more by those external users or the legal structure.
Often, yes. The need for that level of detail and formality comes from external demands or legal requirements.
Okay, that makes sense. Right, so we've seen why businesses produce them, basically, for information, and who uses that information and for what specific purpose.
A whole cast of characters.
Definitely. Now, let's loop back to those two big goals we mentioned at the start. Using financial documents to, 1, assess performance, and 2, using them to inform decision-making. Let's tackle performance first.
Right. This is often the most immediate use, especially for people inside the business, the managers. Looking at documents like the Statement of Comprehensive Income.
The profit and loss account, yeah.
That's the one. It
Yeah.
gives you a direct measure of profitability over a period. Did we make money? How much?
And profit is kind of the main scorecard, isn't it?
Mm-hmm.
It tells you if the business is succeeding financially, at least on one level.
It's certainly a primary one, absolutely. For managers, seeing those profit figures helps them assess if they're meeting their financial goals. Is the gross profit margin improving? Is the bottom line, the net profit, growing? And as we said before, for employees, profitability is that tangible sign of the business's health. It impacts their potential rewards, their job security. So profitability, as shown in these documents, it's probably the most widely accepted indicator of success and efficiency.
And you mentioned earlier, the sources highlighted that these public accounts let businesses compare their performance, their profitability, with their rivals.
Yeah, and this is really powerful. Benchmarking yourself against others in your industry using their public financial statements.
It tells you if you're leading the pack or maybe falling behind.
Exactly. It provides that external validation or maybe a wake-up call for your internal performance metrics. It's not just about hitting your targets, but how those targets stack up against what others are achieving in the same market.
Okay, so assessing performance, looking back, comparing, that's one major use. But maybe even more critical for the future is using these documents to figure out what to do next.
Agreed.
So let's transition to that second key use, using financial documents to inform decision-making.
Right. This is where the numbers become really active, strategic tools. Financial documents provide quantitative information data expressed in numbers.
Not just gut feeling.
Exactly.
Yeah.
Which is essential for making properly informed decisions rather than just relying on intuition or, guesswork. Good decisions generally need good data.
So what kind of big decisions do these numbers help with? The sources listed a few key areas. First one, funding decisions. Where's the money going to come from for that new project or just to keep things running?
Precisely. If a business needs capital for expansion, new equipment, maybe even just managing day-to-day cash flow, the financial documents help predict how much is needed.
Okay.
And the statement of financial position, the balance sheet, is crucial here. It shows the assets, the liabilities.
Helping assess things like liquidity. Can we pay our immediate bills?
Yeah, short-term liquidity. And also long-term solvency. Can we handle our debts over the longer run? The sources mention using ratios for this, but the core idea is using these figures to understand the overall financial health and, importantly, the capacity to take on new debt or new commitments.
And understanding that capacity helps decide the best source of funding then. Like, should we borrow or use our own profits?
That's it exactly. If the balance sheet shows lots of cash sitting there or significant retained profit built up over years,
Maybe you can fund it yourself?
perhaps, yeah. Fund growth internally. If not, it clearly signals, okay, we need to look outside, maybe a bank loan, maybe selling more shares. The documents provide the data to choose the most appropriate and feasible funding route.
So they quantify the ability to finance things, guiding those big choices.
Yes. Debt versus equity, internal versus external funds.
Okay. Another area mentioned is reducing costs. I mean, every business wants to be more efficient, right?
Constantly.
Yeah.
And the statement of comprehensive income, the P&L, is your guide here.
How so?
By analyzing the cost figures, cost of sales, operating expenses, wages over time, businesses can spot trends. Is something creeping up?
Like if the gross profit margin is shrinking.
That's a classic example. If your gross profit margin is falling, it strongly suggests that the cost of actually making your product or buying it in is rising faster than your sales revenue.
Okay.
And it doesn't just say costs are up. It points towards which costs might be the issue. Maybe your raw material supplier prices have gone up, or maybe there are inefficiencies in your production process.
So it helps you pinpoint where to look.
Exactly. It helps diagnose the problem so you can decide on the cure, the cost control efforts needed.
Okay. How about the other side then? Increasing profitability. Using the documents to figure out how to make more profit.
Again, those profit margins in the statement of comprehensive income are invaluable.
Yeah.
Analyzing gross profit margin, operating profit margin, net profit margin.
It shows how well you're converting sales into profit at different stages.
Precisely. Comparing these margins over time or against competitors highlights where profitability is strong or maybe where it's weak.
And you use that analysis to decide on strategies like changing prices or cutting certain costs.
Absolutely. For instance, if your gross profit margin looks healthy, but your operating profit margin is poor,
What does that suggest?
it suggests the issue probably isn't with your direct cost of sales, but with your operating expenses, maybe marketing costs, admin overheads. Wages are too high relative to sales.
Okay.
So that analysis informs decisions like, should we try raising prices? Can we negotiate harder with suppliers? Do we need to manage employee costs differently? Should we invest more efficiently in sales? It gives you that granular view to target strategies effectively.
Right, to boost the bottom line. Okay. And finally, the sources mentioned using documents for investment decisions, like deciding whether to launch a risky new product or enter a totally new market.
Yeah, big strategic bets. Investment decisions always involve uncertainty, right? You don't know for sure how they'll turn out.
Sure.
Financial documents can help analyze the potential returns using forecasts and projections based on past data. But maybe more importantly, the statement of financial position, the balance sheet, again shows if the business has a financial capacity and resilience to actually take on that potentially risky venture.
So does it have the strength to absorb a loss if things go wrong?
Exactly. If the balance sheet shows high levels of cash reserves or lots of retained profit,
It suggests a stronger position.
stronger financial cushion, yeah. It can better absorb potential losses if an investment doesn't pay off quickly or at all. So the balance sheet provides that crucial safety context. Does the business have the financial muscle to afford the risk involved?
Okay. Wow. So it seems really clear then. From understanding how you did in the past to literally shaping the future with these big strategic decisions about funding, costs, profits, investments, financial documents are just, well, foundational.
They truly are. They're like the numerical language of business. They provide the essential data needed for internal management and for building external trust.
Okay, brilliant. Let's maybe do a quick check-in then, a sort of mini quiz based purely on what we've just covered, just to help consolidate.
Good idea. Okay, first question for you listening. What are the two main sort of overarching reasons businesses produce financial documents that we focused on today?
Just those two big goals we set out. And second question, name just one group other than the managers actually running the business who uses a company's financial documents, and briefly explain why they use them. What are they looking for?
Yeah, just one group, and their main motivation for looking at those numbers shouldn't be too tricky.
Okay, so pulling it all together for this deep dive then, we've seen that financial documents are, well, they're far more than just some accounting requirement you have to tick off.
Much more, they're dynamic tools, essential for a whole range of different people and groups.
And their core uses, as we've hammered home, are really to provide that quantitative basis for assessing how well a business has performed.
Yep, looking back.
And, maybe more importantly, to inform and guide those really complex decisions that shape its future direction.
Looking forward.
So understanding these documents isn't just for accountants or business owners, is it?
Not at all. It's valuable knowledge for pretty much anyone who interacts with businesses, whether you're an employee, a potential investor, maybe a supplier, or honestly just someone who wants to understand the economic world around you a bit better.
Which actually raises an interesting final thought for you to consider as we wrap up. Given how much weight is put on this information, how profoundly decisions and perceptions are shaped by what's in these financial documents, what happens? What are the real-world consequences if the information in them turns out to be inaccurate or maybe even deliberately misleading?
Yeah, something to mull over. A lot riding on those numbers being right.
Definitely. Well, we've covered a significant amount of ground today on the crucial uses of financial documents.
We have indeed.
And remember, if you want to explore this further, maybe review some definitions or try some practice questions related to Chapter 32.
You can find more resources by visiting www.igcse-business.weebly.com.
Excellent. Well, thank you for joining us for this deep dive.
Thank you. Until next time.